Yeah. Hello everyone. Welcome back to the channel. Are you ready to speak the language of the business like a pro? I am Abek, and today we're tackling financial accounting fundamental. Think of this as your mini-MBA crash course. I'll distill a version of what you learned in a top business school right here for free. We are covering the key concept that every aspiring business leader needs to know, whether you are a student, a future CEO, or just curious about the inner working of financial reporting. This video is for you, and we will not only uncover the fundamental, but also discuss how it impacts the business owner and how it looks from the perspective of business owner. We are not just going through definition at here. We are going to understand how financial accounting drive decision making and influence strategy. By the end of this video, you will be able to understand the core concept, recognize its importance in various contexts, and even spark potential limitation. So back her up, grab a notebook or your favorite digital note-taking application, and let's get started. Introduction to the financial accounting. So what exactly is a financial accounting? As its core, financial accounting is a specialized branch of accounting that focuses on recording, summarizing, and reporting an organization financial transaction is the systematic process that translates a company activity into standardized financial language. Well, this is a foundational concept in an MBA program. A financial accounting involves recording, summarizing, reporting financial transaction of an organization to external parties, investor, creditors, regulatory bodies. Standardized rule. It adheres to generally accepted accounting principle (GAAP) or International Financial Reporting System standards (IFRS). Think of these as the rulebook, or these standards ensure comparability and transparency across different organizations. Objective information. It aims to provide objective and verifiable financial data. This objectivity is crucial for building trust and confidence in the financial reporting process. Focus on the past. It primarily deals with the historical financial data, analyzing past performance, helps stakeholders access current and future prospects. External use. It is designed for use by the people outside the company. Think investor trying to decide if they should invest. The primary goal is to provide information for decision making by the external user. Summary reports. It produces standardized financial statement like the income statement, the balance sheet, and the cash flow statement. These reports are the primary output of the financial accounting system. Verifiable and reliable accuracy and dependability in the financial statements. Accuracy and reliability are crucial to inform stakeholders. Imagine you are the analyst at a major investment fund. You need to access the financial health of two competing companies before recommending which one to invest in. You would rely on their financial statement, the product of the financial accounting, to compare their performance, profitability, and financial stability. Module 2, Advantage of the Financial Accountings. Now that we know what financial accounting is, let's discuss its advantages. Why is this so crucial for the business, investor, and the economy as a whole? These advantages are the center to understanding its value in the business world. Improve decision making, provide information for informed decision making by investor, creditor, management, and other stakeholders. Enhance transparency, promotes on transparency and accountability in financial reporting, building trust and confidence. Compliance. Ensure compliance with the legal and regulatory requirements, reducing the risks of the penalties and legal issue. Attracting the investment, make it easier for companies to attract investors and secure funding by providing credible financial information. Benchmarking enable comparison of financial performance across different companies and industry. facilitating competitive analysis or result allocation, helps ensure resources are used in the most efficient and productive manner. Imagine you are a lending officer at a bank. You need to decide whether to approve a loan application from a company. You will rely on their financial statements to assess their ability to repay the loans. Accurate financial accounting make the decision-making process more informed and reduce the risk of bad loans. Disadvantage or limitation of the financial accounting. Alright, now the reality check of financial accounting isn't perfect. It has its limitation, and understanding this limitation is just as important as understanding its advantages, especially when interpreting financial data and making a business decision. Critical thinking is a skill heavily emphasizes in any MBA program, and understanding the limitation is key to critical analysis. Historical cost bias is primarily relies on historical costs, which may not reflect the current market values. Lack of the forward-looking information focuses on the past performance and may not provide insight into the future prospects. The subjectivity in an estimate. Certain accounting estimates such as depreciation involve subjective judgment and can affect financial statement accuracy. Financial statements are typically prepared periodically, resulting in a time lag between transaction and reporting. Financial accounting standards can be complex and challenging to understand, requiring expertise and interpretation. Financial statement can be manipulated to present a more favorable picture of an organization financial performance. Imagine a company has a significant amount of intangible assets like goodwill on its balance sheet. These assets may not have a readily determinable market value, and the valuation can be subjective. This is a limitation of financial accounting, and it can be difficult to assess the true value of these assets. Okay, teams, we have covered a lot of the ground so far. I hope you are finding this valuable. If you are, please hit the like button. It really helps the channel grow. And if you want to keep learning more about the business and finance, subscribe and hit the notification bell so you don't miss a thing. Also, I'm curious, what's one thing you have learned so far in this video? Leave a comment below and I read them all. Module 4. Key financial statements. Okay, let's talk about the stars of the financial accounting show. The financial statements, these are the primary tools for understanding organization financial health and the performance. Let's review three main ones you need to know. The income statements, a profit and loss statement, reports a company financial performance over a specific period or examine a quarter or the year. Revenue, expense, and net income or the net loss. It's like the report card for the company profitability. Did they make the money or did they lose money? And more importantly, why? Balance sheet statement of the financial position. Provide a snapshot of a company assets, liability, and equity at a specific point in a time. Assets, what the company owns, liability, what the company owns, the equity, the owner's stake. Think of it as a photograph of the company financial position at a specific moment. What do they own? What do they owe? And what's left over for the owners? The statements of the cash flow track the movement of the cash put into and out of the company over the specific periods. Cash flow from the operating activity, invested in activity, and financing activity. These statements tell you what the company cash is coming from and where it's going. Is generating the cash from its operation or Is this relying on the borrowing money? Module 5. Importance of the stakeholder. Okay, find a core module let's sum up in understanding why financial accounting is so vital. It's not just for the business, but for the entire economic ecosystem. Help investor access the financial health and the performance of company they invest in or plan to invest in. Provide information to creditor examination bank to evaluate the creditworthiness of borrower before granting loans. Assist management in making strategic decisions, monitoring performance, and ensuring accountability. Enable regulatory bodies to monitor compliance with accounting standards and regulation, ensuring transparency and investor protection. Affect the employee job security, compensation, and career prospects. Inform the customer about the financial stability of the companies they do the business with. Module 6, business owner perspective. Now let's shift gear and specifically address the perspective of a business owner. You have learned the core MBA level concept, but how does this translate to running your business? Financial statement as a management tool. As a business owner, your income statement, balance sheet, and cash flow aren't just for external party. They are your most valuable tool for managing your business. Use them to track performance, identify areas for improvement, and make data-driven decisions. A business owner must know how to manage costs so they can have more profit and reduce their debt. Financial accounting provides the foundation for budgeting and forecasting. By analyzing the past performance, you can develop realistic budget and project future financial results. This is crucial for planning growth and managing the cash flow and securing funding. Every business decision has a financial impact. Understanding of financial accounting allows you to assess the financial implication of your decision, ensuring that they align with your overall business goals. As a business owner, you don't need to be an accounting expert, but you do need to understand the basics. Don't hesitate to work with a qualified accounting professional who can provide expert advice and support. And there you have it, a wide tour of the financial accounting fundamentals, provided you with both the core and level knowledge and practical insight for business owner. Hopefully, you now have a much better understanding of how business track their money, communicate their financial performance, and make informed decisions. Understanding costs is not only about the financial accounting, it's about the saving money. So a business owner can have more profit. Remember, this is just the beginning. Financial accounting is a vast and complex field. But a solid foundation, you can continue to build your knowledge and skills. If you're enjoying this video, please give it a thumbs up, subscribe to the channel, leave a comment below. What other business topic would you like me to cover? I'm all ears. Thank you for watching. See you in the next video. Please review carefully. Let me know if there are any specific works that you want to emphasize